All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off with the S&P 500 as usual, we saw that today we closed below this trend line going back to March 2020. You guys know I've been talking about this for a little while now. And today was the options expiration for the month of July. So again, a little bit of an interesting thing here going on. The last time we closed below this trend line was the first time we closed below this trend line, and that was on the options X Friday of June. So again, today we closed below that trend line on the OpEx of July, and we saw what happened last time. So could they be setting us up for another bear trap? It's possible, but there is some serious breadth issues in this market, and you know, if they rip this higher, they rip it higher, but we have to be on guard. I do have a cycle date, another cycle pivot potentially lining up next week based on the analysis I've done. And the last time we had one was right here in May. And as you can see, it played out perfectly. The difference is I was looking for a little bit more, a little bit more than a lousy 3% correction. But hey, when you're in this much of an uptrend and you're getting this much liquidity in the market, sometimes that's just the nature of things, and dips are bought before they even become real dips as panic buying starts to set in. But with all that said, you could say that we are actually in a correction currently. It just hasn't shown up on the stock futures. And so what I mean by that is institutions are shelling out shares of individual names and then using cash to bid up index futures to keep the market from crashing as they unload. I'm just going to rifle through quite a few examples here, but you can see there are a lot of sectors that have been in a corrective mode for a while. Dow Transports, let's just go and zoom in here. The Dow Transport's well off the highs. This has been in pullback mode since May when I had my cycle date here. And so the cycle date worked out very well as a pivot top for the transports, just didn't translate to the overall market. Home builders, same exact cycle date on the top there. Lumber, you guys know I called this one out. Lumber, lumber's at sub 500 now. This was my cycle pivot on lumber. Bitcoin topped out in April, and it's been in a bear ever since. Caterpillar is well off the highs. This thing's getting punished here. Rolling over now in a downtrend on the daily time frame. Stocks like Home Depot, nice pullback here. It's holding up well, but well off the highs. XLE, I talked about this last week. Again, XLE getting pretty much bludgeoned today, but I talked about this in last week's video. You're right into this 50 moving average. And, I said sentiment on oil stocks was very, very, very overcrowded, over bullish. And you're coming right into this 50 moving average on the monthly time frame. And you've done so without pulling back. You're just going straight into it. That's usually going to be good resistance, and XLE getting hit. Also, that is starting to affect the price of crude. Typically, producers can be a leading indicator. Crude pulling back a little bit here, and now this is very significant. I want everybody to pay attention to this and understand this. We did something very special here today. We put in a lower low on the daily chart for the first time since November, which was the initial bull market pivot breakout, essentially. Right, so now oil is vulnerable to a pullback, and I used the same exact indicator, the same exact technique to just pick the top in Bitcoin months ago. That as soon as we take out this pivot here, 50,000, it's now vulnerable to correction. You got one more little move up, and then it dumped out very quickly. So there's lots of stocks here. AMD, some of these semiconductors, they're starting to roll over. KLA 10 core. This is an ugly chart here. Boeing. I liked this stock. I loved what Boeing did last Friday. This is a great candlestick pattern. But now look what you've done on the weekly time frame. We have this beautiful inside bar pattern here, and you've just been chopping in. This is all bullish consolidation. But guess what? Goes below that low. This is now a failed pattern. Boeing's going lower. Facebook. This is a name that's been on a tear. but closing below this bull flag low. So Facebook coming back in a little bit. Some of these FANG names were really overbought. I talked a lot about this over the past week. These names are looking really trappy. Another good example, AMC. Last Thursday, they popped it higher, and they pumped it into the weekend. Friday had a little bit of a pullback, but they pumped it into the weekend. And every amateur investor who started trading with a stimmy check a month or two ago, they were buying calls. They were greedily buying calls that expire less than a week away. And what do the institutions do? They fade it right back down into this gap fill right here. So they burned all those calls worthless. This is a classic institutional game that's played during OPEX every single month. And when you have a bunch of newbie investors that don't know any better, they're going to play right into it. So there's a lot of pikers out there in this market, and this is, we're really in unprecedented territory. We haven't seen anything like this since the tech bubble, and it's just even more widespread now because there's more liquidity and there's social media. But speaking of AMC, another index that you could argue has been in a correction for a while. Look at the Russell 2000. Russell hasn't done anything since March, and now AMC makes up by far the largest weighting in the Russell 2000. So what do you think is going to happen to the Russell if AMC rolls over? Going lower. Russell closing below this trend line on a weekly time frame. So downside targets immediately. You've got the 200 moving average. You've got this upsloping trend line, but ultimately I think it's going to 195, and maybe on a capitulation, though it pushes down to 190, but in a corrective mode. But this market's, I've been talking about August being a pivotal month, and possibly towards late July we're going to have a lot of problems, and it looks like that is starting to play out here. So we really need to be on guard here next couple of weeks. They could still, save this thing and move it higher. This could be another bear trap. We've seen them do it before, especially right after the options expire. That time of the year that time of the month seems to be where institutions push the market lower, as in a bull market, you're going to have more calls than puts. So they want those to expire worthless. But again, we got to be cautious here. We're going to take a look really quick at the VIX. So leverage short vol is absolutely astronomically crowded. And again, this is why I don't mind owning volatility. This is why I don't mind owning VXX. I treat it like an option, and eventually this thing will pay, especially with how leveraged this system is right now and how much deleveraging needs to be done. But again, so we've seen this, we have this little breakout here of the downtrend, and now the VIX looks like it wants to base again. So I'm keeping an eye on this very closely. I'm looking to add to it. If I miss the move, I miss the move, but it's fine. I can still make money off of that anyway. But I would like to get in a little bit lower if I can, and take advantage of the move that is coming. Lastly, we're just going to take a look at gold and silver really quick. So gold pulling back a little bit today. Not the greatest candle, but holding up all right. All things considered, nice little flush down, but ultimately you're still holding this green bar right here on gold. Bottom line is these two moving averages are resistance right now, and you don't want to lose this area of support on gold, this little consolidation here. But if you get back above here, you're going to attack these red bar highs. You get back above that, and it's pretty much game on. However, if gold does dip lower, I have some levels possibly worked out, and we will, as we get closer to those levels, I will let you know. Silver, I did talk about this over last weekend, I think. If I'm not mistaken, I did a video Sunday night. I was saying that I think that silver is going to break down here. I think it's actually going to push through these trend lines. I would not be a buyer here. Do not buy in this area, because we've already consolidated too much above this level. You only want to be a buyer on a trend line when it goes straight into the level. So notice how it's going straight down, no pullback. Goes straight down, now you back and fill, so you're building up strength to push through this. But I do think there is a good buy level on silver at around 23, but we'll have to see a little bit more when we get there. And obviously, we'll reevaluate the situation if that does happen. With that said, I'm pretty sure that covers just about everything. Again, so we're going to be looking for some type of a pivot in the equity markets next week. And we may have already put in the pivot high this week. So Tuesday was our high, hit intraday all-time high, and then we've rolled over. So we might already have the high put in, and we might just have to flush next week. Or there's equally as decent of a chance that they just gap it right back up and push it all the way to 446 or wherever this upper trend line goes. But I do have this period penciled in for some increased risk. So anyways, with that said, you guys take care. I will see you later and talk to you next week.